I look at all the amount of equity. I think the average equity in a home in the United States is still over $200,000. We have the credit scores have never been higher on purchases. We don't have all these adjustable rate mortgages flowing all over the place. This is not 2008, and people that want to make that comparison just don't understand. There's 5 trillion reasons why it's not the same. But even if you remove those, this is the Fed, and I don't necessarily like all the underwriting restrictions and how hard they are. But in situations like this, I'm glad that
I like them.
Yeah,
I like him. If you don't have these restrictions, you end up back in 2007. So I'm glad that the Fed has these restrictions in place.
The same. It's one of these things is not like the other, right? This little hiccup is not 2008,
right? And
100%. I agree with you 100%.
One data point I want to offer. Then this is the last one. I'll shut up after that. But if you are going to go back and look at the past, which is a good thing, we encourage you to do that. Why only look at 2007? Why don't you look at 1991, 2001, look at the 80s, look at those recessions, and look at how housing did in those recessions, and look at how rents did in those recessions. The problem is 2007 is the anomaly. And you're basing all of your investment decisions on the only real estate anomaly of the last 100 years.
Yeah.
That doesn't make any sense, right? Look at all of them. Look at all of them, and you'll have a much better picture of what happens when economy goes into a recession. You have 9 different sets of data.
And I've always compared the one chart that's like one of my favorite things is to compare the median home price to the median rental price. And so you're looking at what's the approximate rent value of a unit per scale. And if it gets too out of whack, and it was getting close before the Fed started taking action.
It was getting close.
But when the price is no longer, hey, I can't afford to stay in this place, I need to rent it, and it can't support the debt and can't support the valuation, you're toast. And I think that's, to me, because living in Vegas, people were buying houses for $1 million that you would rent for $2,000. That was a $300,000 property or $200,000 property. That was not $1 million property. In other words, the rents would never support that valuation, and people got kicked just got crushed as a result. We weren't there. We still have rents going up. They're keeping pace for the most part with the values. There was a period of time when the value started to run away a little bit. Not anymore. The rents are still going up. That's because demand is so high right now. And again, I feel bad for the poor. I feel bad for people that are kind of moderate income, people that are just starting out in the workforce. It's because it's going to be tough for them to buy a property. It's going to be really.
It could be. But you're an investor. You're listening because you're an investor.
Yep.
So if there's one data point that you should study, it's what happened in 1982 when the Feds raised interest rates to 18.5. Right? What happened to the housing market then? Most people don't understand this, right? The short answer is housing market went down for 4 months, 7% down. Some markets went down 10%. And then they went back up, and they ended the 82 recession higher than the beginning of the recession at 18.5%. Yesterday's interest rates were 5.53.
Yep. Driver growth. Like you always look at growth and inflation isn't going away. So if you're betting on inflation, they're going to curb it, but it still goes up every year. They're basically telling you the value of your asset, whatever you buy, is going to go up no matter what.
Absolutely. And it's not even really in their control. I think inflation in the future, Toby, is more in the 3% range. I think we had this amazing 2% time frame that has ended. It may not come back for decades. If inflation is going to be 3% a year, I want to buy every fixed asset there is to buy.
You got it. Everything's on sale right now, and we should be on I think of it that way, within reason. But you're still looking at it going, this is a great time. If everybody thinks this is a bad time to be buying, this is a great time to be frugal about your buying, but it's still a great time to be buying or again, short-term pain, long-term gain. If you're willing to do it, to purchase something and stick out this next year.